Did you know that the government wants your company to get out of the group insurance market? That's right. Over the next few minutes, I'm going to show you why the government is trying to pit you against your employees in an effort to collapse the group healthcare market forever, and how you can position yourself to survive the Affordable Care Act. I'm going to show you how, by not offering group health insurance, you can position your company to have a strategic advantage over your competition that does offer group health insurance. First, let's talk a bit about how we got where we are. Remember this one? We have to pass it so you can find out what's in it. Those infamous words of then Speaker of the House, Nancy Pelosi, started what we now find ourselves 3 years deep into, the Affordable Care Act. 3 years later, and we're still learning what's in it, the good, the bad, and the ugly. Here's what we do know now. The way we purchase insurance has changed forever. Group plans are on their final leg and will soon disappear altogether. Individual plans are the future, regardless of what happens politically from this point forward. Think of it like retirement plans of the past. There was a time when retirement plan was synonymous with pension plan. Those days are long gone, and most plans being individual 401ks, 403bs, 457s, etc. You get the picture. The same thing is set to happen with group health insurance, and the government has set several measures in place to make sure this happens sooner rather than later. In fact, the government is purposely pitting you against your employees for just this purpose. The really big question is, how are you going to respond? Advice is coming in from everywhere, and at some point it just sounds like noise. Are you going to just sit back and hope it goes away? Is your insurance agent trying to get you to commit to renewing prior to the end of the year so that you can lock in one more year of potentially lower increases than they promise you are certain around the corner? Well, this advice may be just a little too self-serving. Has your agent also made it clear to you that if you offer health coverage that is deemed affordable by the employee-only 9.5% test, that your employee will be barred from accessing the government subsidies for their family's coverage, which is now no longer an option beginning January 1st. You see, you used to be doing your employees a great service by providing them health insurance, but the way it's set up now, you could be penalizing your employees to the tune of $10,000 or more. Not to mention, you could be placing yourself at a competitive disadvantage when it comes to an employee choosing to work for you or work for someone else. Let me give you an example of how this all works. In this first example, you'll see where the employer contributes the bare minimum he or she must to avoid paying a fine on this $55,000 per year employee. The employer is only required to make sure that the employee coverage is affordable based upon the regulations, or in other words, that the employee cost for employee-only coverage does not exceed 9.5% of the employee's household income. In this case, if you multiply 55,000 times 0.095, you will find the employer is only responsible for $175 a year of this employee's $5,400 insurance cost, and the employee must now pay approximately $14,381 per year for average full family cost. Under this scenario, you could have a riot. The employee is never going to go for this arrangement and would most likely opt out for an exchange. But that's not the good news. That could be bad news. You see, there is a possibility that instead of the $2,000 in penalty you would have paid for not offering a plan at all, you could now be subject to a $3,000 fine per employee, up to the maximum fine you would have paid were you not to have offered a plan at all. As I mentioned earlier, the government wants you out of the group insurance business. Now let's say you as the employer decided that you will pay 50% of the employee-only cost, or $2,700. Now, the employee only has to contribute $11,856 out of pocket. A little better, but still room for a revolt. Since you are still offering group health insurance, you may still be subject to penalties if the employee chooses the subsidy route. Here, you pay 100% of the employee-only cost, which has been up to now very typical. Your employee is still out of pocket $9,156 or $763 a month. How many people making $55,000 per year can afford $763 per month coming out of their check? Here, the employer decides to pay 50% of the full family cost, or $7,278. That still requires the employee to pay $7,278 or $606.50 per month. So what happens if you drop health insurance altogether? How does it look for your $55,000 employee now? Now he only is out of pocket $4,135 or $345 per month for full family coverage, because the government has stepped in with a subsidy to the tune of $10,421. Where is the employee better off? Again, remember, the health care reform plan is designed to kill the group health insurance market. What if we could show you how to set up a plan where you could place the money you're spending into an account for the employees to use to buy their own individual plans through our private exchange? Yes, we can get you out of the health insurance business forever. Wouldn't it be nice to never again deal with a health insurance renewal and the inevitable rate increase with ever disappearing benefits? A little bit more about exchanges. There are basically two types: those run by the government and those not. The government exchanges deal only with health insurance, and the best comparison is like getting your driver's license from the DMV. The product choices are very limited within a government exchange. There are both federal and state exchanges. However, over 30 states have opted out of forming state exchanges, leaving only the federal on the government side. Texas is one of those states that opted out. Then there are the private exchanges. That's what we are at Benefits at Work. Here, the employees have more choices to choose from and can pick and choose the best overall package of benefits to suit their needs. They won't be enrolled or trust their valuable personal information to anyone other than trained, licensed insurance professionals, supervised under the strictest guidelines. No government navigators with zero accountability will be allowed access to our exchange. And just so you know, a navigator is some unlicensed person with zero insurance experience, hired by the government to sell Obamacare through the government exchanges. It will probably be the same people you see on the streets signing people up for Obama phones today. Just a quick note here. You can tell a few interesting things from the map above. The solid yellow areas represent the parts of the country that have the most people in them that didn't seek medical care from a physician because of the related expenses. What's a little harder to tell by looking at this map is that there is a direct correlation to those people and the fact that the yellow areas also have the lowest number of primary care physicians per resident. You could easily conclude that while delivery of primary health care in Texas is in pretty bad shape, it's going to get a whole lot worse as physicians stop accepting insurance or leaving their practices altogether. Put another way, if your current plan seeks primary care through the traditional insurance markets that you did in the past, I wish you the best of luck. You're going to need it. Here's the model that we believe you should give serious consideration. Under this model, you can establish a competitive advantage against your competition while at the same time delivering a quality of care to the whole family of your employees at a level you were never able to in the past. Wasn't that supposed to be the ultimate goal of health reform? Well, with this plan, we'll help the government out a little bit by turning lemons into lemonade. Here's how it works. Assuming that you are willing to contribute the national average employee-only cost, we can show you how to provide a comprehensive whole family solution to health care. In this example, we're assuming a family of 4. The first component is that you purchase for your employee and their family a membership in health care to you. I'm going to go into detail in a bit about this innovative solution. However, it will suffice to say it is unlimited access to primary care at a low monthly cost of just $25 per family member. Next, we'll couple that membership with a critical illness policy, a hospital indemnity policy, and an accident policy. These 4 tools together for an approximate overall cost of $200 per month, coupled with a bronze qualified health plan, give your employees an unprecedented level of health coverage while still allowing them to access government subsidies through the exchanges for high deductible, low cost coverage, in most cases at no cost out of pocket. The remainder of those dollars, at your option, can go into a defined contribution health reimbursement account exclusively for that employee's use to pay for things like out-of-pocket medical expenses, co-pays, deductibles, etc. This money now becomes the employee's to use for health care any way they see fit. So let's now break down the components. I think you'll be amazed at what you'll get. Healthcare to You is a remarkable variant to healthcare delivery that has been developed right here in San Antonio by Dr. John Rodriguez. Dr. Rodriguez was determined to find a way where he could practice great medical care and not spend all of his time managing a practice and dealing with insurance companies. Here's what he put together. As a member of Healthcare to You, your employee has access to unlimited acute and chronic care with same-day appointments. The H2U Wellness Program, which is unlike anything you can do alone as an employer to improve the health of your employee base in a meaningful way. It includes the Healthcare to You risk assessment, which includes categories like heart health, diabetes awareness, emotional health, nutrition, physical activity, personal safety, preventative exams and screenings, men's and women's health, skin, lung, and digestive health. The membership also includes biometric screening, height, weight, blood pressure, body composition, blood glucose, blood cholesterol, and triglycerides, annual physicals with labs. There's also 24-hour-a-day, 7-day-a-week on-call physician for after-hours urgent care via the phone, and H2U also offers low-cost immunizations. There's also well-woman exams, and there's phone consultations for minor ailments. You see, Healthcare to You can do this because since they don't have to bill insurance companies, they don't have to force you to come in for an office visit when a phone consultation can do the job. That's better for everyone. And they also do drug testing. Now, if we just stopped there, we'd have a great package of benefits. But we've wrapped 3 essential products together with Healthcare to You to deliver a comprehensive healthcare solution. The first of which is a critical illness plan. This plan will pay a lump sum benefit of between $10,000 and $30,000 upon diagnosis of cancer, heart attack, stroke, end-stage renal failure, and major organ transplant surgeries. It also includes subsequent illness benefits. Added to that is an accident policy, which helps cover accident emergency treatment, initial accident hospitalization, and physical therapy. And finally, we have included a hospitalization policy. Whether your employee elects to combine a catastrophic illness plan or not with this package, most new plans are only going to cover 60 to 70% of the cost of the claim after the deductible has been met. Our combination of policies, including this hospitalization policy, help cover and in many cases exceed the out-of-pocket expenses that your employees could experience as a result of a catastrophic injury or sickness. This policy includes inpatient hospital, outpatient surgeries, emergency room treatment for accidents, radiological diagnostic testing, and even ambulance transportation due to an accident. Now, our 4 coverages combined with a bronze qualified health plan, as you can see by this graphic, in many cases at zero cost to your employees, provides the ultimate solution to your healthcare dilemma and makes your company stronger through a comprehensive benefit package. The government wants you out of the healthcare business, and you want out of being forced to provide coverages that place your business at a competitive disadvantage. The plan that we just presented accomplishes both. You are now free to budget exactly what you are going to spend each year for health insurance coverage. Gone are the days of having to fight against rate increases, deductible changes, and coverages that are a losing battle. You can spend more time on the issues that are important to you. Let Benefits at Work help you chart a new course to overall well-being of your workforce. We look forward to the opportunity to address all of your questions and craft a tailor-made solution that works for you. Thank you.